Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hey, good morning, everyone. Jason here. If you're into Halloween, happy Halloween, if that's a thing. Anyway, kids will be out tonight. Got a few lollies for them. But I hope you're well, folks, wherever you are. Good to see you on a thankful Thursday, terrific Thursday, whatever it might be. As we're getting things rolling along, do the quick intros, get things warmed up this morning while everyone's jumping on the live. Jason Witten's my name, as you might already know. And if you don't, and if you're new, welcome to Wealth Coffee Chats. Good to have you here. We hang out in the morning for a fair while now, around about 10 past 8, talking about the idea of property investing, going the distance when it comes to creating your wealth. And, we all know, well, you should, and if you don't, now you will. Property is not get rich quick. It doesn't happen. It doesn't happen, folks. And you should know that. And if you want to get rich quick, don't invest in property. It's a great place. It's a great, safe, consistent place for storage of wealth and long-term wealth creation. Unbelievable. Unbelievable. Excellent. However, if you want to get rich quick, that's not property investing. It's something else. Maybe business, maybe buying and selling. That's trading. Get into that. Anyway, ranting already this morning. Let's keep going with the show. Morning, Brad. There you are. Good to see you, mate. Bunty's in the house as well. Thanks for joining. As always, Bunty, a few of the regulars. Luke's here too. Good morning, mate. Whoever that is, hello. Good to see you. Thanks for joining us this morning. Fabulous to have you here. And good to be hanging out with you guys on a Thursday. Hey, what's the news? What's the latest news? Is anyone latest news, good news for us? Chuck it in the chat if you've been listening. I already put it in the headline today anyway, but what's something that we've all been having a little look at and having a bit of a conversation about over the last little while. We've all been waiting or wanting or expecting interest rates to go down at some point, but there's a leading indicator when it comes to interest rate reduction, interest rates going up, interest rates going down. Doesn't mean correlation is causation. I don't know. I just say that to sound smart. But you know what I'm saying. Just because one thing happens doesn't mean the other thing will happen. But most of the time it does. What has gone on? What's of recent times, folks? That's a leading indicator of what might be in store for us sooner rather than later out there in the marketplace. Chuck it in the chat if you think you know. But I'll just get on with talking about what we see right now. And folks, the good old,
Let me see if I can make this work. There you go. The good old CPI is down, and inflation. If I can make that work. There we go. Inflation to 2.8. Now, what does it all mean? Listen, I'm not an economic professor or studier or anything like that. I just know property cycles and property behavior very, very, very well. Why? Because I've done it thousands and thousands and thousands and thousands of times over 25 years, helped people buy 10,000 properties in every nook and cranny of Australia and New Zealand. What does it all mean, Jason? Well, it all means that there's a lot of things that we see in the world of property that we know about. Now, is it blurry? Must be on your phone because it's pretty clear to me. Hopefully that can help. But anyway, the point is, team, that inflation is down within the range, the 2 to 3%. Yeah, that has absolutely helped, Brad. Yeah, the government. The government interference. You did right. They mess with everything. They do. They mess with it. Now, listen. What does it all mean? Let's have a little look. Inflation's down. Oh, if inflation's down, we had Dr. Andrew Wilson on the other day. One of the big inflation drivers, folks, in the world of Australia is the cost of transport and oil, particularly, and fuel. That's down a fair bit. So that's good news for us. That's good news. Because what it means is the overall inflation's down. A few things are down, a few things are up. There you go. All right. So let's have a quick sticky beak at a few things, right? Now, goods are down. Nice. Services still high. The combination of those two means, overall, it's within the 2 to 3% range for the RBA. And the point is, team, electricity rebates. There you go, Brad. You're dead right. A few other things here. Automotive prices. The average, the fuel is down, team. That's where the fuel's down a long way. That's what Dr. Andrew Wilson was talking about the other day. Rent stuff is there's rent still growing, etc. So the point is, there's some good news for early indicators of interest rate changes. That's the good news. All right, we're all wanting to have that as a thing. There we go. Let's have a look at what the good old politicians are up to and see if they're going to mess it up. There might be some things go on with the marketplace and the economy, which is fabulous and fine. But at the end of the day, other politicians pulling their heads in. Well, good news. Again, good news, but again, they can change their minds. The incumbents have said we're not going to put negative gearing reforms, nor are we going to put capital gains tax reforms on the agenda for us to, lose another election on. Well, that's good because they will lose another election if they tackle that. They're going to concentrate on the supply. Now, they're going to concentrate on the supply of homes. They're going to try and increase the supply. Now, I've been talking about a supply disaster for 3 years. You guys who dialed into the Wealth Coffee Chats have heard me talk about it. We could see this coming a mile away. And it's, I don't know, with all their resources and their focus, politicians just don't get it right, do they? No? They don't ask the right people. They don't get the right experts in. Anyway, I wouldn't want their jobs. What a pain. But listen, they're going to try and focus on supply. Will that work? I don't think so. For you and I as property investors, what's going to happen? That's really the conversation here for us this morning, folks. Right? Inflation, fabulous, down, settles things down. Still the average Aussie is struggling to get by. That's tough work out there when it comes to, paying the bills. Now, the government will have to do something about that first. So too will the RBA. And the first thing that will happen at some point, and it might be sooner. It might be sooner now. There was lots of conjecture and conversation about interest rates, middle to end of next year. This sort of news might bring it earlier, folks. It might bring it earlier. The point is, here's the point. This is my conversation, and I've been saying this for a while. Prices, the property growth has kind of slowed in a few areas. Brisbane and Perth and Adelaide are still kicking along quite nicely, but Sydney and Melbourne slowed down a little bit. And in certain places, in certain types of stock, it's slowed down. But here's what I'm telling you right now. This is the early indicator, folks. We've got maybe 3 to 6 months to get a position in some of these marketplaces before the prices kick on again. End of story. End of story. Interest rates go down. The average person will borrow the maximum, pay the most, and the change in borrowing power, we'll talk about that in a minute, the change in borrowing power will push the values along as we go along. Yeah, no, I reckon you're right, Luke. They'll try and push to get re-elected with lower interest rates and claim it, etc., etc. So that's the drill, right? That's the drill. Now whether Labor's in, whether Liberals in, whether whoever else is in, they're all cut from the same cloth. You can't trust the bastards. You just know there's a certain type of behaviour, that us as property investors need to navigate. All right. I'm pretty happy that the Greens got kicked to the curb in Queensland because those guys are maniacs, absolute lunatics, and they were going to make the world of property so much worse. They were really holding the incumbents over a barrel. And, even though I don't think their housing bill was going to do anything fabulous, at least they were trying. Anyway, off on a tangent again, Jason. Now, listen, the only place we can catch up with supply in this country, folks, is in apartments, in units. Okay, you're not going to get greenfield. You're not going to get greenfield development, which is lots and lots of land subdivisions. You can't ramp up supply. Where's the only place you can ramp up supply in this country? Probably any country, to be quite honest, is in apartments, medium and high density dwellings, right? The gap, the property gap or the value gap also between houses and apartments is the largest ever, right? So 40 to 45%, the difference between average house price and average 2-bedroom unit price. So it's the place, it's going to be the place. Which place in Australia, folks, just made a move? And I think it's a smart move. Which place in Australia? Put that in the chat for me if you know the place. Which state in Australia just made the move to have a crack at increasing medium density housing with an incentive? Which state just did something? And this is why we think that state's going to be all right. Actually, chuck it in the chat right now. How can you increase medium density housing? You have to support the developers. Yeah, Victoria, you're dead right, Luke. You have to support the developers because the pricing at the moment is still a gap between the ability for the buyer to borrow and the funds to buy a property. Okay, so Victoria has done something. Victoria, and they're kind of like stamp duty, which is approximately about 30K of an average price property. They're going to make it like 2K or something like that, depending on your where you live and what you're doing, right? So Victoria, this is where the supply is going to come, folks. Now it's not going to come in, saving the world, fixing the supply issue across Australia, but it's going to happen in Vic, and this is where I think some value lies, some excellent value, some good quality property, and some opportunity to get in there. The challenge is those who've got the highest incomes, 150 to 200 to 500, are winning, right? the rich people get richer in these times, and that's that's the way it is. That's the way it is. Those who've got more money are buying more things. They're buying more assets. Those who don't, those who are aspirational in income and position in life, are struggling because of the cost of living and the cost of interest. Okay, that will change the moment this set here. Let's call it the 100 to 150. Get back in the game, folks, because that's the majority. That's the demographic size in the population. Once they're back in the game of borrowing and buying, then things are going to take off. They're going to crack on when it comes to the pricing of real estate. The challenge I see is that we've got a problem with being able to deliver it. That's it. That's what's going on, right? We've got a massive shortage of construction. There's plenty of projects that are worth more in Brisbane, let's say, work on the Olympics projects, the infrastructure projects down in Victoria, hospitals, go work on a hospital site compared to a unit site, etc. We've got the union issues when you go above four stories in Victoria, especially. The unions are basically adding 10 to 20% cost to constructing for no reason at all. The government needs to fix that. They're trying to, but I think they're too weak and they're too piss weak. These are the problems, right? We got to fix this stuff if we're going to fix the shortage. And the shortage ain't going to be fixed, folks. It's not going to be fixed. I'm telling you right now. And check this out: record highest number of company insolvents ever in Australia's history, ever. Holy shitballs! Yeah, and guess what? What industry, folks? Put it in the chat for me. What industry? What industry right now is leading the way in insolvencies and companies going broke? If I asked you 6 or 12 months ago, it would have been a different answer. Very sadly, it's the hospitality industry. Small cafes and restaurants and things like that. Very sadly, they're the heartbeat of really good places and spaces for work and entertainment and living and housing and stuff like that. So that's a sad state of affairs. The government's not helping with that. They're a bunch of assholes. They've gone absolutely insanely aggressive in rolling all of these companies for taxes. Anyway, that's another conversation for another day, maybe more like a rant than a conversation. But we do have construction companies still up there high as we go along. All right. So what's the point? What's the point of a conversation today? Here's the takeaways for me, team. Here's the takeaways for me, and it'll probably sort of go to Tim's questions. What will it do? Will it rise? Make real estate prices go up? And the answer is yes. Okay. From today, even though there's a couple of markets still kicking on nicely, the moment the interest rates come down, and they will, it's an absolute fait accompli right now. It might be sooner rather than later. So in the first 6 months, it might be in the next 6 months, not in the next 12 months. That's going to kick the market on. Those who have been held or forced out of the market will be back in the market at probably one of the lowest supply moments we have ever had, actually physical supply of, let's say, new real estate, especially if they're first home buyers and they're looking for grants and other concessions, right? And yes, Tim, that will push the prices. Absolutely, 100%, especially in the bottom end of the market, especially in the affordable end of the market, especially those bands where those grants kick in, right? Up to $850,000, you get, a grant being a first home buyer. So anything from $750 is going to go to $849, right? In a heartbeat. Yeah. That's going to happen. Anyway, there you go. So the point is, team, inflation is down. Early indicator, early signs of interest rates coming down. The knock-on effect of that will be people will be back in the market because their borrowing power will improve, and then they'll be looking for opportunities, either owner-occupiers or investors or both. The governments have said we're not going to mess with negative gearing and capital gains tax. So that's good news for the nervous Nellies. And to be honest, I'm actually happy when the nervous Nellies, or what I call the good time Charlies, don't invest in the damn market because they ruin it for everyone. They're tossers. They come because they think they're going to get rich in 5 minutes, and then they sell their properties for a loss later on and then affect all of us. But anyway, you can't help people who are uneducated do stupid things. But anyway, there you go. Yes, real estate prices will rise, and they will rise pretty quickly in the next 12 to 18 months and continue to kick on because supply won't be fixed. There you go. Anyway, bit ranty, bit all over the place this morning, but you know what I mean. Yep, as you go along. Yep, yep. Yeah, interest rates are going to go down for sure, Tim, as we go along. Yep, couldn't have said it better myself, mate. There you go. I love it. All right, folks. Well, that's it. Wealth Coffee Chat done and dusted. Thanks for hanging out today. Stay well, stay safe, be good. Listen, remember, this thing is a marathon, not a sprint. Take some time to build our property portfolios. Don't get distracted, but remember, don't sit on your laurels. If you're able to do a deal right now, then I would be bloody getting out there and getting amongst it. That's what I would be doing right now, because if you wait, I'm telling you right now, you wait until you see everything moving, you're $100,000 worse off. That's what's going to happen. Anyway, speak to your coach, talk with your team, get on it. All right, folks, good to see you. Thanks for joining. That's it from me. Wealth Coffee Chat done and dusted. See you tomorrow. The finance team will chat to you tomorrow. Be good. See you later. Bye-bye.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us.